So today was a pretty tough day, isn't it? I mean, for us, it's pretty simple because this thing followed exactly our system, our process. It's a typical VWAP sort of day, testing the VWAP, rejecting the VWAP, and over and over and over again. So this is what you're looking at my screen right now. That is the chart of NQ, the chart for NASDAQ futures. If you trade QQQ, this is just the futures version of the same. So the red line which you see is let me go to the shorter time frame so you can see it even clearer. So the white line which you see on my screen is the AVWAP, which is coming from the overnight sessions. So you can clearly see what happened throughout the entirety of that night price every time they try to push above it. Over and over and over again. So this is what we call as trend days, by the way. So every time they try to rally, they reject the VWAP, sell off again. Every time they try to rally, reject the VWAP, sell off again. You can see it right here, which I anchored, which is for yesterday's overnight session. Monday didn't do much. If you think about it, markets were just consolidating. And then Tuesday, we got massive move in overnight. So every time they try to rally above, sellers stepped in at the VWAP. Try to rally above, sellers stepped in at the VWAP. And then they completely gave up. And during the session, where did they rally towards again before they starting to pull back again? The overnight VWAP around 17,986, retrace back almost another 40 points to the downside from that same level. So it was a pretty easy day to trade, especially if you know what you're doing. I wasn't involved with the markets until the later half of the session, but I did manage to take like 2 trades from here, the reversal trade from here from February AVWAP all the way towards, I didn't capture all the points, but it was like a 20-25 point move to the upside. Happened pretty quick, content with it. So now the question becomes, how do you identify it, right? Because there's a lot of ways to trade the trend. We know that already. We just like focus on, okay, trade the VWAPs. So once it tests the VWAP, buy the trend from the VWAP or short the weakness from the VWAP, take the trades for 3 hours, right? But today it wasn't the case. You can't buy anything today because for the entirety of the night, it was trading under the VWAP. So if you go to the QQQ, you can see it even clearly. For the entirety of the session, they were just trading under the VWAP. Every time they try to rally above it, if you go to the 2-minute time frames, you'll see it even clear. Every time they try to rally above the same, they got rejected as the sellers stepped in immediately. And this is not the tape which you would be buying. You can say like, they rallied right over here. If I could have bought it right here, I could have set my stop losses right here. But yeah, what about the overnight sessions? Even if they pushed higher from here on, we have a massive area of interest at 440.53. What is your probability of making 3 hours with a $2 stop by entering something right here? Not much. So at these types of levels, you're just looking for overnight sentiment, which is what? Every time it rallies towards the VWAP, short it. So that carried through into these intraday sessions as well. So right now, first things first, if you want to identify these types of reversal trades, we actually took this reversal trade, by the way, which was almost a $3 move in QQQ. The point becomes how to identify these types of reversals. First things we're going to start. Open your trading view charts, and especially if you're sitting in front of a computer in front of your screen, what is the ATR of QQQ? First things first. Check it out and let me know. If you're in front of your computer, what is the ATR of QQQ? You can either unmute yourself and join the conversation, or you can just text in the chat. So if you don't know what ATR means, like if you're new here, especially go to indicators and look for average true range right over here. So add this indicator to your charts. And if you want to see the number will be right here on the left-hand side corner of your screen. So what ATR actually tells you is the expected move for that particular stock for that particular day. $5.50-ish. That is the ATR of QQQ. What is the opening price? Where did they open today at? The opening price on QQQ is at what? $440.94. So $5 to the downside. What's the expected move to the downside on Qs? 435. And to the upside, it's what, 445? That's the range to keep an eye out for. So now, step two, near that 435 range, is there any area of interest for you? Do you see any area of interest in the chart near that 435 range, near that 180R move? Look at the daily chart. No need to go for any smaller time frames or whatever it is. Stick with the daily. Let me know what you see and why you see it. You can either use NQ, you can either use QQQ. It's totally up to you. So we're looking for multiple confluences. So is that 435s around that zone? Do we have any area of interest? So there are multiple, number one. So do you see how they gapped up from Feb 21 to Feb 22? That massive gap which they had from the overnight sessions. What's the lows of the day for that session? It's $433.72. Great, mark that level. So that level, market's already down more than 180R and coming in contact with this area of interest. So that's first area to keep an eye out for, 433.72. So now let's look for multiple confluences, added confluence. So just a minute. Sorry about that. So now let's look for multiple confluences here. Where's the 20-day moving average on QQQ located at? Add the 20-day moving average. 20-day moving average is at $434.67. That's where the 20-day moving average is located at. So now the zone of 434.50-ish to 433.70-ish becomes an area of interest to look out for, especially after spot QQQ moving 180R. Don't get me wrong, they're still under the VWAP, by the way. We're not talking about trend-based trading. We're talking about how to spot a potential reversal on an intraday basis. Now you're going to see all my thought process, which made me took this trade in the first place. Number one point of confluence, it's 433.72, which was the lows which they made after they gapped up big time. What's the second point of confluence? Positively sloping 20-day moving average, which is currently at $434.50. So now let's go to the NQ. I want you guys to go and anchor the AVWAP from February 1st, first trading day of the February, which is around, Feb 1st on Thursday, 2024. Anchor that VWAP for me. You can either do it in NQ, that'll be even better. Go to NQ and do the same over there. Now, once you anchor that February AVWAP, where is that AVWAP coinciding at and where did the buyer step in today? So let me remove all these lines and let me change the color of that Feb AVWAP to blue. So the blue line which you see on my screen is the AVWAP from February. Where did the buyer step in today after selling off throughout the entirety of the day? That was almost like a 100-point move, by the way, in NQ, which is almost like a $3 move in QQQ. So where did the buyer step in? Around that AVWAP on February. Now, what are the multiple confluences do we have? Number one.
Hey, Mario.
Yeah, go ahead.
Question. Why would you just keep only February 1st? I mean, how would you know that? Like on mine,
Okay.
a lot of times I keep like prior weeks, or if it's a Monday, I'll keep Fridays or so on like that. But how would you know to go all the way back to February and clear it out?
All right. So there are certain AVWAPs which we have on the chart, which stays on the chart. For example, week to date will stay on the chart until the end of the week. So once that end of the week is done, that AVWAP will be removed, especially if that week is kind of boring. If the week doesn't offer any significance whatsoever, that week to date AVWAP will be off the charts. And the next one is month to date. For example, every month when the first trading date begins, we typically anchor that candle and leave that AVWAP on that candle until the end of the month. So that's going to tell you who's in control of the trend for that particular month. So yeah, we do anchor every Monday and leave it until Friday. That's going to be the week to date anchored VWAP. But once that week is over, that AVWAP is off the window. We don't want to clutter our screens with a bunch of AVWAPs running around the screen, which doesn't offer any help to anyone whatsoever. So once the week is done, the weekly AVWAP will be thrown off the window until that week offered a significant reversal from the market standpoint. So if that doesn't happen, that AVWAP is gone. About the monthly AVWAPs, every day, once the month begins, I want you guys to anchor the March 1st candle, by the way. You can see it on my screen right here. The white line is coming from the screen. That is the March 1st AVWAP. That is the March monthly AVWAP. So I didn't remove the February from my screen yet because we had a beautiful February to the upside. And March is typically known for corrective behaviors from the markets. So I was like, okay, fine, let me just leave this on for quite some time to see how it does. And today it played into favor. And one thing you got to understand here is I didn't take the trade because they came in contact with the AVWAP of February. There are multiple confluences around that level. It's not just the AVWAP of February. It's also AVWAP of February coincide with that level. Number one, we went to QQQ. You saw that area of interest at 433.72, number one. And number two, there was a positively sloping 20-day moving average around that same vicinity as well. And number three, we also have AVWAP, which is coming from the February candle, February 1st trading session, sitting exactly at that place, which is the blue line, which you see on my chart. So there are multiple confluences here. And again, next things, how can you monetize it? How can you take this trade? So again, this is not a typical, okay, wait for the rejection from the VWAP and then buy the strength off of there or buy the weakness off of there, right? We are under the intraday VWAP. Intraday is controlled by sellers. Now, what do you do in case of situations like this? Pretty simple. You size down. Size down. Simple as that. So let's say typically when you trade the trend days, you goes with 6 contracts or 7 contracts while taking the trade to the upside or to the downside. This can be with futures. This can be with puts. Doesn't matter. So let's say you buy like typically 10 contracts when it tests the VWAP or rejects the VWAP to the downside for puts. Or let's say you buy like 15 contracts when it bounces away from the VWAP typically. But right now, we are under the VWAP. So we don't know if this level is going to be acting as a support or resistance, or if the price is going to push to the upside or to the downside until after the fact we see it happen. So even in today, when I took this trade, I tagged Brian. The one thing which I told him was, I'm entering a trade with a 7-point stop, and I just got in with 2 contracts, small positions. Happy to get stopped out if I'm wrong. Sizing down, because since we don't know, even though we have all these areas of interest in our site, that's why we took the chance, by the way, even with these areas of interest, we don't know if a particular level is going to be acting as a support or resistance until after the fact. So what I did was I entered right here at around this 43-ish. That was my entry. And at that time, I entered like a 7.5 stops, which was like almost what, 0.3% risk of my entire account. And my entry was at around 41 to 40. I'm not quite sure with the 7-point stops, which is around 33-ish was my stops. And they came like almost 1 point close to it and then completely ripped higher. So it's always about probability. And even if you're wrong, which you will be most of the time when you're trying to catch these reversal trades, you shouldn't be losing more than like 0.2, 0.3% of your entire account on that trade. If you're wrong, well, it's fine, happens, because that's not your typical trade which you used to take, which we used to take using the VWAP. This is one of those reversal trades which you're watching. And when you're trading the reversals, you are going to be wrong more than you are trying to trade the trend. Because with trend, it's pretty easy. VWAP, you have an area to set your risk against. If you're wrong, you'll know it immediately. You can just get out instantly. But when you're trying to trade the reversal, when you're trying to time the reversal, it's going to get complicated. And if you notice something, we typically don't take these types of trades. We took it today because number one, they already moved one ATR to the downside. So I can't be sitting here and expecting more downside to follow after they moved like almost $8 to the downside when the ATR is just 5. Number one, I mean, they can push even lower, but again, probabilities, not certainties. That's the first thing to look out for. Second thing, around this 434 area, we got the positively sloping 20-day moving average. In a normal garden variety market conditions, when a price test, when a stock in an uptrend with a positively sloping 20-day, 50-day, and 200-day moving average, you will most of the time see a reaction from the price. Simple as that. So now that's another added confluence. You got a positively sloping 20-day moving average sitting right there. And what's the number 3? And when you go to the QQQ, you can clearly see there is a horizontal level sitting right there at that $433.72. So now you got multiple confluences. Even with the multiple confluences, you still don't know if that particular trade is going to work out in your favor or not until after the fact, because we don't know, right? Like, what if they just like melted right through? Yeah, more or less, yes. It's not a swing trade. It's not a swing trade in any way, shape, or form, just a scalp. So now we don't know if that's going to follow through. Like, they might have very well just bounced like this, like consolidated here for quite some time. If they consolidated here for quite some time, I wouldn't have been interested in it, because we need to see reactions like this from these areas of interest. Let's say when you're spotting reversals, and let's say you have a potential support or resistance levels, multiple confluence, and they're just doing this above that area of interest. When they're just doing this, run, not interested. We need to get this fast moves to the upside to back up our thesis. If you're not seeing that aggressive move to the upside, then these types of trades won't be worth it, because if they consolidate above that area of interest, most likely scenario, they're going to give it up and fall under. And especially, you got to be okay, you got to be open-minded with giving it up and falling it under, because the trend on the intraday basis is to the downside. The 5-day moving average is starting to curl to the downside. The price is under the 5-day moving average. The momentum is not in your favor. The intraday trend is not in your favor. And you got to be open to the idea that they can just consolidate here and then completely fail and lose that AVWAP and lose this 432 and proceed to fill this gap at 429 and change to the downside, 425 and change to the downside. But this is a shorter time frame trade. We are trying to monetize the next 2 15 to 30-minute candles. That's it. We're trying to project it, and we're trying to take it, and we're sizing down along the way, because it's not a typical sort of VWAP trade which we take. So you can see how many confluences I look out for before taking trades like this. It's not just, oh, I have a line on my chart, so I'll just buy calls because they come in contact with that level. No. And I'm pretty sure if you did the same thing in the past, I'm pretty sure none of you in here do the same, but I'm pretty sure if you did the same in the past, you bought calls at your so-called your support levels, and market just melts right through. And today in the morning notes, we had this 440 level as area of interest, 440.50. What happened today morning? Let's say if that's a support level, like let's say you bought into it as soon as the market opens, what happened to that call? Where will you set your stops? It's done. Immediately, they just broke under it, lost the VWAP. It's done for.
Without even thinking about it.
Yep. So immediately lost the support, immediately went under. Again, that 440.50 is our area of interest and not the markets. And there is also one of the main reasons why we say wait for the first 6 minutes for the price to give you the confirmation. Don't chase it. Trading opening drive is a skill on its own. So you gotta be right. Not only right, you gotta have a system which backs that trading the opening drive, because you can be wrong and you'll lose a lot of money immediately when you're wrong. So if you don't have a system to trade these opening drives, just don't touch it. By opening drive, what I mean is trading the first 4 minutes or first 2 minutes of the market open. A lot of traders do that, yes, but they do have a system backing the same. They do have a plan backing the same, or they do have a cushion to take the same trades. So right, we are trend-based traders. So we only trade the VWAPs, and we trade the trend for the intraday and get monetize the direction of the trend to the upside or to the downside. But if you're having a system which backs the opening drive thesis, I take opening drive trades sometimes, very rare, especially when you see a gap up. And I don't know how many of you took path with me during last November. That was an opening drive trade. Remember when the path gapped up with almost like what, 20-hour wall last earnings? That was an opening drive trade. So we entered the first few minutes of the market open and rode it all the way back up, and we almost captured like 380 hours by the close. So that's an example of opening drive trade, by the way. That can go anywhere. So if you don't have proper stop losses, it's absolutely useless to touch these opening drive setups. Wait for the setup to tell you whether if they're going to go higher or lower. And today, Q's told you. When did they tell you? Right here at around 940. They sold off pretty hard, rallied all the way up towards where? Towards the intraday VWAP. And let's say you short it right here at 439.81. Where will you set your stop losses at? right here at the highs of the day, which is at around 440.92. Now you have an area to set your stop losses on, and you'll exactly know when you're wrong. And you know your risk, which is almost $1 from your entry. And now if you're risking $1, how much you should capture to the downside? At least $3 to the downside. Is it under 1 ATR? Yes, because the ATR of QQQ is $5. So even if you take the trade right here, you can still capture the entire 1 ATR move to the downside on QQQ and close the trade for 3 hours in profits. So this is how I want you guys to look at the markets as. Don't look at the markets as, okay, I have a support at these levels, so I'm going to buy calls. I have a resistance at these levels, so I'm going to buy puts. It's not just that. Those are your levels. What are other confluences which you have around that same level, which backs your thesis? Multiple confluences. That's something which you need to look out for. So just like how I gave you an example for this 433.72 today. And it's not just like, oh, how do you have an AVWAP anchored on February? No, it's more than that. You can see how many other confluences played into the factor when taking the same trade on its own. ATR is done. Okay, good. Positive 20-day moving average around the same level. Great. 433.72 horizontal levels. Great. And also AVWAP of February. Great. So what's the common thing for the market to do after moving 1 ATR? Are they going to just completely sell off? That happened in 2022, by the way, where QQQ's just, there was no green candle for the day. If you go to the 15 minutes and check the charts during, I think it's 2022, happened somewhere around the peak bear markets during July or June, not quite sure. On that particular day, there was absolutely no green candles. You see right here, how we saw like consecutive green candles on the 15 minutes. It was like consecutive red candles that NASDAQ was down like 3% or 3.5% that day. It was just complete catastrophe. They didn't even bother to come up to test the VWAP or whatever it is. It was just the entire sessions looking like this. Imagine that. So there will be days like that as well. So you try to spot a reversal and get completely socked in the face. And days like that happen as well. But again, with VIX at 14, at that time when that is happening, VIX was trading at around 32 or 33. So when VIX is at 14, you can't expect those types of days. Well, it pretty much can happen. That's why we size down along the way. So if you're wrong, we're not going to be losing like what? The same amount of money which we'll be losing if we get stopped out on our typical trades. So we have no business in taking these types of trades, but there are a lot of probabilities in our favor. So we took it. So when we're taking these types of risk, the first thing you should do is not how much money I'll be making if I'm right, but how much I will lose if I'm wrong. So what can I do to minimize that loss? Because it's not a typical trade. Sizing down. Instead of buying 6 contracts, I went with just 2. So it was a quick in and out sort of trade. We got in, we got out, done for the day, and we're out. Because I missed this entire session, by the way. I missed this move towards the session. I missed this trade right over here when they rejected the VWAP. I did trade the overnight. I did trade a bit too long overnight. So I just slept off for the entire session because I was awake for the entire night trading this session over here. So I started trading at around right here. I was watching for the potential reversals on the markets after they moved 1 ATR to the downside, and we got it right here. We took the trade, one trade, done for the day, and good. In, out, hello, goodbye sort of thing. So with that being said, if you guys have any questions on the same, feel free to unmute yourself and ask right away. I'm more than happy to answer the same. I'm pretty sure you might have come across some difficulties when trading these types of setups. Let me know. Good help, thanks, appreciate it. Always look to the left. Yes, indeed. All right, so if this is clear, we'll move over the individual stocks which we have on our swing trading positions right now. A lift got absolutely socked with the markets again. Pretty interesting. What time does the night session end in futures? Night session, it doesn't end, by the way. It starts at 6 o'clock EST and goes on until the next day evening, 5 o'clock. For example, the futures open today at 6 o'clock in the EST in the afternoon, and they go on until tomorrow evening, 5 o'clock. And they only close from 5 o'clock to 6 o'clock, by the way, just 1 hour close. That's it. There you go. And lift Well, this position is getting beat down by the markets today, and compared, it's considerably held up pretty good, by the way, and I'm happy with how they close. And as long as they hold the 1673 levels, I'm not going to be much concerned about this position. We have our stop losses at 1630. If they partially fill this gap today and then reverse back to the upside. So let's wait and see how this thing sets up. But markets are under the 5-day moving average. You've got to be okay with the stoppages. There are going to be a lot of swing trading setups, which we might take down the road, which we might get stopped out at. That's why we have a rule that when you see the SPY or QQQ trading under the 5-day moving average, what do? Instead of risking our typical 2%, our risk factor goes down to 1%. We're only going to be risking 1% of our portfolio when we are taking the trades. Pretty simple. Size down, stops wide. Because when the markets get volatile, when we see these types of wild overnight moves, like markets down like 0.5%, markets down like 2.5% in the overnight, you'll see massive gap downs on these stocks. When you see these massive gap downs, you don't want to be sized on the same level which you used to be sized when the markets are in an uptrend. Yeah, the stock is still in an uptrend. There is nothing wrong with the particular stock which you're trading at. But when the market gaps down overnight, what do you think is going to happen to these individual stocks? Regardless of how good it is, there is something called as ETFization, where if the markets pull back, regardless of how good the stock is looking, they are going to pull back alongside with it. If the broader markets crash, regardless of how good of an uptrend stocks that is, it is going to come down alongside with it. So this is one of the main reasons why, like, regardless of how good an uptrend looks, beautiful looking charts tend to fail. Breakouts tend to fail. And all these sort of risks is why one of the main reasons why we size down wide our stop losses. Let's say like you take the same trade, like 1630 is your similar stop loss. And if you take like 100 shares on the same positions, now the markets are not about the 5-day moving average. Now what you do, instead of buying 100 shares, you're just going to buy 25 shares and you're going to move widen your stop losses from 1630 to somewhere around the $16 zone. So now you're giving your room more time to breathe, and you're also preventing yourself from all these gap downs, overnight gap downs risks, because you have a wider stop loss. And now even if you lose money, even if you get stopped out, you're still losing only 1% of your entire account. That is the type of risk is what's going to push you through when the markets are going through a corrective phase, by the way. Not learning technical analysis. Yeah, you can learn technical analysis. Good job trying to trade with markets with technical analysis alone. I mean, it works, but the more you trade the bear market cycle, you'll understand one of the pure base technical setup, which is looking absolutely great. One day it'll be looking great. Next day, you'll see it gap down like 4%. Because the markets are down like 2.5% overnight. So one of the beautiful setups out there tend to fail. And when you're putting yourself in that position, you got to make sure that you're not exposing your portfolio to a lot of risk. So this is something which you guys need to be aware of. Every time you see SPY or QQQ under the 5-day moving average, and every time you see a trade idea which is being shared, every time you see me entering a trade, immediately, okay, instead of taking a trade with a 2% risk, our trade total risk goes down from 2% to 1.5 or 1% of our entire account. So even if we get stopped out, we wouldn't be losing our typical 2%. We'll only be losing 1% of our entire account on that trade. So with that being said, Nicole, I can see your hands raised up, and just give me a minute. I'll go pick up my food. I'll be back.
Even Chipotle, I beg you.
Hey, does anyone know if he went over covered calls yet, or did I miss that?
Not
I don't
today.
think so.
No, I
Yeah,
think I just joined a couple minutes late, but he was talking about the futures and the AV WAPs, and then we were talking about like negative, not negative, but bear markets.
And the watch
Okay.
list.
Yeah, because I know he said he was gonna have a class on like covered calls, and he had access to start looking into that.
Hello. All right, what's going on?
Hey, Mario, you got Chipotle, don't you?
Exactly, that's exactly what I got, to be honest.
Yeah, I told you. Didn't I tell you? I told you.
Chipotle and coffee.
Extra guap.
I don't eat guac, man. I don't like it.
Ah.
It's just typical steak and rice, simple.
That'll work.
All right, so Nicole, what's your question? Go ahead. And about the classes on covered calls, we'll schedule something, and I was actually writing a script on the same to see how I can minimize explain the same thing in a simplest form,
Wow.
and I had to scratch the entire thing off because it didn't meet my expectations. So I would work on it this weekend, and we will do a class maybe by end of this weekend. We'll do something on the weekdays, and we can just record it, and I'll just post it in here so you guys can watch it anytime on your leisure time. So it'll be great. I'll let you guys know the time. All right, Nicole, go ahead. What's your question?
Yeah, sorry, my brain was slow to process what you were saying before, but and I hopped on the call a couple minutes late, so let me make sure I'm tracking and was understanding what you were saying. We were talking about, you were talking about futures, and you were talking about the AVWAPs that you use on the futures markets, and if I am correct, you said you use one at the beginning of the month,
Right.
on the first candle for the beginning of the month, and then you do one at the beginning of the week. It sounded to me, or maybe this was my assumption, that you then do not do a daily one because that's too cluttered. You only use those two AVWAP.
No. Daily is unset. I don't even have to say I use daily VWAP. We use daily VWAP on every trade which we take. So other
Well, I was
than
thinking,
that,
but
go ahead.
future specifically, future specific.
Even for futures, same thing, same system.
So for futures though, like, because their schedule is wonky, like your first candle of the day
6 p.m.
is
EST.
6 p.m. Okay, all right.
That's when the futures markets open for that particular day. So for intraday VWAP on futures, it will be at 6 p.m. EST. So that's today, you can see it right here. So this is the intraday VWAP from 6 o'clock. The other line which you see, that is the intraday VWAP. And this red line which you see is the 9:30 candles AVWAP. So you can see what the price is doing, by the way. They rejected yesterday's VWAP, pulled back, found support from today's intraday VWAP, pushed higher. This is what we call as AVWAP pinch, by the way. So now we got to wait and see what the price does from here on. Are they going to break through this 17,986 and push higher towards that 1840-ish? Or are they just going to give up and continue to the downside and break this 17,846 to form a new low to fill that gap? So we'll wait and see. So about
and are you still
VWAP,
waiting on the approval or whatever for your prop? Didn't you?
Yeah, I
doing a
still
prop
have to
firm
make
challenge?
$200 on that account to get approved. And I didn't get into that account yet. I'm just trading with my personal account. I have to get into that account to get it funded. Most likely I'll finish it off by end of this week so I can just get it done with. So it's currently at 26,300-ish. Last time, that's where I saw. I have to log into that account and see where it's at. And it's still at that same price. And we'll wait and see. I'll let you guys know definitely once I get approved. Most likely it'll be done by this week, if not by next week, and if not by end of this month.
So
Thank you.
Question specific on futures. So say, I traded, regular US markets during the day, and then futures I want to do because I'm up, do a London session or Asian session. Do you anchor a VWAP when that session begins?
No, not necessarily. Not necessarily. No, because it can be useful, of course, because it's 2 p.m. EST right now. I don't know if you're in a place where the time changes. So if you're in East Coast, it does. So when the time changes, the European markets open at 3 a.m. EST.
Right.
Before the time change, it'll be at 2 a.m. EST. That's the only difference. So now it opens at 2 a.m. EST. So you can anchor the VWAP at 2 a.m. EST candle, and you can make it as a handoff, and you can remove it off once the session opens from the US markets. You can do that, by the way. You can absolutely do that. So I don't trade the Asian sessions because it's just, you will see the same sort of price action. It will be a bit wonky until something really crazy happens in China. You won't see much of a volatility during that Asian session, Asian market open. But London is where it starts to kick in real good.
Mario.
Mhm. Go ahead,
Hey,
Chris.
quick question, man, and it's kind of like off topic. Is this session being recordable?
Oh, it is. It is. You good.
All right, perfect.
It's been recorded. You're right. Mhm.
Excellent. I just wanted to know because I gotta hop off real quick. I gotta go
No,
pick
no,
up
go
my
ahead,
kid
man. Go
from
ahead.
school,
Yeah,
man.
go ahead. Go ahead. Go
I
ahead.
just want to make sure the session's recorded so I can go back and review it later.
Yeah, it is recorded. I'll post it in my YouTube. You should be good to go.
Perfect. Appreciate it, man. I'll see you guys tomorrow.
Take care, Chris. See you tomorrow.
Later.
Nicole, you don't have to raise your hands before asking questions, by the way. You can just unmute yourself and go. We don't have a lot of members. It's just our members here.
Oh, tonight that might
Yeah.
be true. That's not always true.
Yeah, tonight you're good. That's why I said tonight you don't have to raise your hands. You can just unmute yourself. You're good. Go ahead.
Oh, okay, perfect. Thanks. I'm honestly just really interested to get into futures, mostly because I have, a day job that I
Mhm.
sometimes can and sometimes can't divide the attention that I need to trading, and like I'll make stupid mistakes, which
If
of
you
course
work
costs
9 to
money.
5, futures are the way to go, by the way. You can just trade futures anytime you want. You're not tied up to the time. You can wake up at 4 or 2 a.m. in the morning at the
Which I
London's
usually
open.
do for a quick diaper change. However, but I'm on Central Time, so right now you're saying the London session begins at 1 a.m. my time, right?
I don't know what the central time equivalent of EST is.
I'm 1 hour behind you.
Yeah, it's 1 hour because I'm in
Yeah.
Chicago. So I got
So
Central.
yeah, so if it's 2 a.m. EST, which means 1 a.m. EST, 1 a.m. Central Time for you.
Right
So
now. Yeah.
Yep. Mhm.
Okay.
So time changes
And-
in Central as well, right? Like when the
Yeah,
so when the time changes,
when they
it'll
do
be
daylight
yeah.
savings time, yeah.
Yeah, so it'll be like 2 p.m. EST, 2 a.m. EST, in 2 a.m. Central instead of 1 a.m.
Right.
Central. Mhm.
Got it. Okay. And then from the little bit that I had read online though about futures, I mean,
Mhm.
nobody actually mentioned that. Like I they could be wrong or this information could be outdated,
Mhm.
but it seems like most people's observations was that there wasn't enough volatility to make it worthwhile really until maybe just before
They are
the
true.
market
That
opened.
is absolutely true, by the way, because during 2022, the overnight sessions used to trade exactly like how the intraday session trades right now in New York sessions, by the way, because VIX was at around 25 points and above. So when VIX was higher, when you're trading ES or S&P 500 futures, it was moving exactly like how intraday sessions move right now at this level. So that was interesting to trade overnight. But right now, when the VIX is at 14, you can't expect much move from SPY, especially when it comes to the overnight sessions, until you see some liquidity jumping in. So let's say you buy these types or trade these types of overnight sessions with the stop losses on. Have you ever wondered why like price literally gets to your stop loss level and then bounces higher? You'll see that happen a lot when you're trading these overnight sessions because one, there's not enough liquidity, and two, you're exposing your stop loss, and three, it's going to show up, by the way, where did you set your stop losses, and they're going to take it out and rally to the upside or take it out and dump to the downside. So these types of things are something to keep in mind, by the way, when you're trading overnight sessions on a low liquid markets. So it's one of the main reasons why I say, like, if you want to trade overnight, wait for the London markets to open, wait for the liquidity to show up. You'll be having more than enough time to establish your entry. At that time, you'll be having a skeleton. You'll be having like, okay, this is the area where the price rejected in the overnight session. This will be where I'll be keeping, this is the price where I'll be keeping an eye out for. And if they break under this level, well, I have another level to keep an eye out for, which is the price where they rejected the overnight sessions at. So now with that skeleton, you can start with the trading. You can see how the price structures after the London open or Europe. It's not just London, it's the entire Europe in general, but something to keep in mind.
Mario, this Carly, did I miss a class on futures, like trading futures?
Not really,
and
Carlene.
the volatility?
No,
Or
I didn't
just people
do.
just-
No, I didn't do any separate sessions on futures. It's just we already
Okay.
have like a lot of traders in here. To my surprise, actually trade futures. So I would do one. Like for example, Brian, Bill, Britt, Faith, all these people are new to the futures and they're interested as well. And we got Joe trading in the futures. Just to my surprise that Ninja over here, he trades futures as well. So a lot of people in here actually trade futures. So for any of you
What are
who's
some-
new, go ahead.
what are some of the pros and the cons on trading futures
Um,
versus the regular
Okay,
market?
do you trade SPY QQQ options?
I do, yeah.
Okay, so it's
No Greeks.
yeah, number one, there's no option Greeks, there's no delta, theta, any of that nonsense. Number one.
Oh,
And number
okay.
two, you're not tied to pattern day trading rules. You can trade as much time as you want, but it's a double-edged sword. But it can either be an advantage or disadvantage depending on what type of trader you are. So you can trade anytime you want, how many ever times you want. You can take like 200 trades per day. As soon as you close it, you'll see that the money in your buying power. It's not unlike cash accounts. There's no such restrictions on this is how much trades you need to take. So that's a good thing. Purely directional. As long as you get it right, you're going to make money. If you're wrong, you're going to lose money. There is nothing else. As long as you get the direction right, you're good.
That
And
sounds interesting.
number three is the way the contracts move. For example, what you see in front of your screen is NQ, NASDAQ futures. You trade QQQ a lot, right? So this is
Yes.
the futures equivalent of QQQ.
Right.
So you can see it's trading at 17,954. That's the
Uh-huh.
price of this. That's the price of the futures right now. So let's say for every point it moves to the upside, there are two types of futures. One is micro, the other is mini. So just like how you have SPX and NDX and SPY and QQQ, for SPX you have to pay more compared to that of SPY for options. Just like that, micro or the smaller versions of the mini. So for, how much money you'll be making. So for calls, let's say you have $1,000 in your buying power and you see an option and it says like $300, you'll be paying $300 to open the trade, right? That doesn't, it's not how it works with futures, by the way. We go with something called as margin. So how it goes is you need to have certain amount in your buying power in order to open a position. For example, let's say you open an account with TraderWeight. TraderWeight has this margin rules. So if you're opening micro contracts on NASDAQ, you need to have at least $100 in your buying power when you're holding this position. So let's say you have a $2,000 account.
Right.
You can open 20 contracts of MNQ, which is micro contracts of NASDAQ futures. But the problem is, if you're opening 20 contracts, you need to hold your account above $2,000 in buying power. The minute it drops under 2,000, your entire account value, they're going to liquidate your entire portfolio.
Oh, okay.
So this is where the risk management aspects comes in. If you have a $25,000 account,
So just managing risk in this aspect then.
it's easier said than done, is what my point. Because it's not just managing the risk; it's about position sizing. That's the aspect. So you can, just because you can doesn't mean you should, right? It always boils down to that point, which we usually discuss. So let's say you buy 2 contracts on MNQ with the $2,000 account. So you just have to keep your portfolio above $200 at all the time in order for you to hold that contract. So for every point moved to the upside, you're going to make $2. So let's say MNQ moves from 56 to 57. You're going to make $2.
Okay.
So if it moves 10 points to the upside, you'll make $20 per contract. So MNQ can move big time, by the way. Like right here, this move was around like almost like a 150 point
From
move.
846 to what?
Yep.
956, 100 point.
Yep, almost like a 150 point move to the upside. So if like I'm quite sure you can't capture like almost every single cent of this move from upside to downside, but hypothetically speaking, if you captured this entire move, you would be making $300 per contract. And this is for micro, by the way. In mini, that is 3,000.
Wow.
For mini,
but
you
the
make,
commissions are more significant too.
Yes, for commission, like the margin goes higher as well. If you're trading mini, remember how I said you need to have $100 in margin to open per contract on micro? That 100 becomes 1,000 with mini. You need to have at least $1,000 in your buying power to open a contract. But
I think I need to read up a little bit more about this.
It's pretty simple, Colin. The basics are pretty simple. The problem is not with learning the basics. The problem which a lot of futures traders face, it boils down to psychological aspects, like not having enough self-control, to not knowing when to stop trading and not knowing where to set proper stop losses and getting kicked out every single time until they blow up their entire accounts. Again, all these problems I faced when I started. So that's where the problem begins. The problem does not begin with you learning the basics. I want you to go and look it up. look up the basics of futures and how these contracts works, MES, MNQ, how these contracts move. It's going to take you like 15 minutes to understand what is what.
You know what
So-
I figured out, Mario? I figured out you can trade futures on Webull.
Not yet,
like when I-
but they are bringing it in.
Oh, okay. Well, yeah, they have a futures area. Let's
Yeah.
put it that way.
Mhm.
And what I found is that thus far, anyway, like
Mhm.
I really like Tradeovate. The only thing is, I through trial and error was trying to figure out how to open a contract and close a contract and put a stop loss and all that.
Mhm.
Like you can, if I just am tapping the screen and say like buy market or whatever,
Mhm.
then there's no way for me to put in a firm stop loss that I figured out. And I tried to look it up and I didn't find anything. The only way I could figure out how to do it once I had opened a contract that way was by doing a trailing stop loss. You can just tap on the screen to get a trailing stop loss. So I didn't know if that was true. Can you
No.
set a solid stop loss
Yes,
if you use the
yes.
buy market button?
Yes,
on
you
the
can.
screen.
But
Okay,
again,
I gotta
don't
figure
use
that out.
that. So let's say go to micro section. If you open that, if you open your app, you'll see a bunch of options like indexes, micro. Go to micro and click on the trade button from there.
Hold on, I'm logging in. Hold on one second.
Yeah, go ahead.
Go to live trading. Okay.
Go to micro and look for the sticker symbol. If you're not in micro, look for the sticker symbol MESH4. That's the ticker symbol I'm talking about.
MES, yeah. Okay.
MESH4.
Mm-hmm.
All right. So do you see a trade symbol right there?
I deleted some from my thing, so I'm trying to see if I
Wait,
have
are you using your
MES
phone
H4.
or your laptop? What are you using?
Oh, I'm using my phone right now.
Oh, you're on your phone?
Yeah.
Okay.
So I
do
can
you
just
see-
let me search for it and
Mhm.
pull it up because I might have deleted it.
Yeah. So just go to the, or in the
MESH.
micro MESH4. That's what we're looking at for.
MEX4?
No, MES
As in Sierra,
Yep.
and then H as in
4.
hotel.
Yep.
Yeah. I don't actually see a letter H after any of these. I see MES March 24 and I see.
Yeah, March 24 is what I'm talking about. That is H4.
Oh, okay.
March
okay. Yeah,
contracts
then I see
are
it.
signified with letter H.
Okay. Yeah.
Mhm.
I am looking at that chart.
So, do you see a trade in there?
The button. Oh, yeah. Yeah.
Click on that. So do you see a buy,
Um,
sell, quantities, market orders, good for day, take profit, stop loss, auto break even? All the stuff?
Yes, but
Yeah.
I didn't know that was there. So I had like clicked on the screen to open my position. And once I did that, now I see that there's a different way to do that where you go to that trade screen
Yep.
and you can
Mhm.
enter your stop loss. And I also like that they
Exactly.
auto calculate everything for you on that
Yep.
screen.
Mhm.
But I guess you really just shouldn't hit the buy market button on the screen
Yeah,
because
no.
I don't think you can you
Yeah.
can set a stop loss
Mhm.
appropriately.
I mean, when you do that, you can only set a trailing stop loss. And if you don't have proper settings for trailing stop loss, you're going to get kicked out. Right now, you can get away with it because you can just get away with setting like 2 point. I was talking to Brian about it like a few days back when he told me that he took a 3-point trade in ES. Setting 3-point stops or 2-point stops works great right now because ES is not moving that much and
Mhm.
markets are not that volatile. But when once the volatility, the VIX starts pushing higher, these 2-point stops, as soon as you click on the buy button, you're going to get a notification that your trade is closed.
And what's the condition that the VIX goes up? Is it in a bear market that it goes up or just
VIX is
what
just a
makes it go up?
mathematical calculation, which is calculated based off of the options premiums for the next upcoming 21 days of expiration. So if a lot of people are buying a lot of options, the VIX are going to go up. Simple as that. If a lot of put options are being purchased, a lot of call options are being purchased as a hedge to the broader markets, you'll see the VIX push higher. That's it. And there are days where SPY will be up, VIX will be up alongside with it. There are days where SPY will be down, VIX will be down alongside with it. So don't get into this thinking of like, oh, when VIX goes up, SPY should come down. No, it's actually the opposite. It depends on the markets, what the option markets are telling you. And you'll see the VIX actually pushing higher, especially leading into the CPI data. When the markets will be up, VIX will also be up like 18% on that day. especially when CPI. What happens during the CPI report, by the way? Markets either push higher or lower. You're going to see some volatility, and traders just position themselves into those events to try to capture that volatility from the markets. So what happens if a bunch of new short-term options are being opened? What's going to happen? The VIX is going to go higher. So it's not like when VIX goes up, SPY should come down. When SPY goes up, VIX should come down. It doesn't work like that. It always based off of the options premiums. So higher the VIX, when will the VIX be higher, by the way? Let's say the VIX is at 20, 25, 30. When will the VIX will be higher? VIX will be higher when you see a lot of traders positioning themselves or hedging themselves for a potential volatile move down the road. Pretty simple. And what's going to happen to SPY? You're going to see the ATR expands. When the volatility expands, you'll see the VIX expand alongside with it. And more today's SPY, you can see the ATR after today's move. Look at the ATR. What happened to the ATR? It ticked up. It ticked up from $4.20 to $4.40. Go to QQQ. What happened to the ATR on QQQ? It ticked up from $5.20 to $5.56. When you see an outsized move like this, you'll see the volatility expand, and you can see that from the ATR. So when you see these outsized move, when you see the volatility goes higher, when you see the expected ATR goes higher, what's going to happen to the options premium? They're going to get expensive. Why options markets are going to get expensive, or why the calls or puts or whatever you're holding are going to get expensive to buy new positions on, because markets are pricing in not 5-point move every single day, but we're talking about 6-point move right now. So when they're pricing in a 6-point move on a particular day, on a day-to-day basis, what's going to happen to the VIX? What's going to happen to the options premiums? Options premiums are going to go higher alongside with it. So something to keep in mind.
Wouldn't IV increase at that time too?
Yes. So IV increases based off of what the price does, not the other way around. Price doesn't increase the IV. IV does what the price is doing. IV increases markets expectations changes based off of what the price is doing. IV is just the market's expectations on a particular stock, by the way. When you see the higher IV, market is expecting a wider move from that particular stock. When you see a lower IV, market is not expecting any sort of move from that particular stock. And if you see a big move from a stock, which just the market's not expecting any move from, that's when you make a lot of money in options. Let's say you see a stock with an IV of 400%. And the next day, the stock moves up like 20, 30%. Yeah, you're still going to make money, but no, you're not going to make a lot of money, because markets already know that this kind of move is coming, and they price it into the options market. Pretty simple. So this is where it gets tricky, by the way, when we talk about implied volatility. Implied volatility follows what the price does. If the price is going higher and higher and higher, the volatility is expanding. IV is going to expand alongside with it. If the market is just trading flat, IV is going to adjust. Market's expectations on that particular stock is going to adjust accordingly. Something to keep in mind. So about the VIX. So right now you can get away with setting like this 2-point stops on ES or 3-point stops on ES, because even if you get kicked out, it's going to happen in a slow way. You're going to know, okay, I'm going to get kicked out. Okay, I'm done. I'm out. So because the markets are slow right now, it's not doing much. But once the VIX starts ticking higher, you'll see how difficult it is with this 2-point stops or 3-point stops on the trades, by the way. You're going to enter. As soon as you click the buy button, as soon as you order filled, as soon as you hear the notification, you're going to be like, stops filled all of a sudden. I'm like, wait, what the hell just happened? Because you just set it too tight of a stop. And you just lost, like, let's say you buy like 20 contracts on the same. You just lost, like, if it's an MES, you just lost 10 contracts, $10 per contract for no reason. That's almost like $200. So this is where having a proper stop step in, by the way. I will guide you guys through. Once the market's volatility actually starts pushing higher, you will exactly understand what I'm trying to say, especially if you're trading futures. You can't trade the markets the same way. We can't trade a high volatile markets the same way you trade the low volatile markets. You can't have the same mindset going for both ways. That's my entire point. When the market's volatility expands, you got to manage your risk accordingly. You got to size your positions accordingly. So let's say you typically buy 10 contracts with the $2 stops. When the market volatility expands, shut it down. And you'll have no business in buying 10 contracts. Trim it. Buy 3 with a 6-point stop. Buy 3 with a 9-point stop. Your total risk stays the same. Yeah, the amount of money which you'll be making is going to go lower, but at that point, the goal is not to just make money, but to protect the capital. So the goal shifts. The complete perspective should be changing alongside with it. So something to keep in mind. This is why I always say, don't get too cocky just because you're making money right now on one of the easiest markets ever. Once the market turns around, how much of that money, whichever you made, you can hold. That's what's going to define if you're a good trader or not. So right now we have these systems like don't lose more than 2% in a particular day. If you get stopped out, even on the worst day, your account shouldn't be down more than 2%. All these, what I'm saying right now, you can feel like, oh, if I just took this trade with options, I would have made like 100% on a particular day. Yes, but once the market starts turning around, guess what's going to keep you in the markets? The systems which we have. And we didn't survive multiple cycles with that mindset of, oh, if I took this trade, I would have made 100%, 200%, by the way. We are still in the markets because of the 2% rule, because of that 1.5%, because of the system, which keeps the risk in check. That's what keeps
clues
you in
you
the
in?
markets. Go ahead.
What clues you into that market change happening?
And I always say this, if you see a SPY and QQQ under the 5-day moving average, size down. Simple. 5-day moving average. That's all it is. So right now you can see on
So we're
QQQ,
kind of in that situation. I mean, we
Yep.
went from being above it to below it just recently. So
Yep.
now is the time where you're behaving more
cautiously. There you go. So we're still in an uptrend, by the way. The daily is still looking great, but we don't know if this is going to morph into something uglier down the road because they're under the 5-day moving average. The 5-day moving average is starting to slope negative here. So we don't know if they're going to gap down under this 433.70 tomorrow and proceed to fall down to fill this gap at 425. We don't know that. And I'm going to give the benefit of the doubt for that pullback because March has tended to be a pretty sucky month for bulls. It's not a good month to trade at all, especially if you're long. That doesn't mean it has to happen, but that's been the case for years and years and years. March has typically been one of the worst performing months when it comes to seasonalities. So something to keep in mind. Same with March, same with September. And when these seasonally corrective period starts, every time you see these types of pullbacks, you immediately go on a defensive mode. If they keep pushing higher, we still have some longs on our portfolio, by the way. They're still going to monetize it. But if they don't, we don't want to be exposed to much of risk to the markets. When we're opening any new positions, of course, we're going to see a great setups popping up during these times on stocks which are actually outperforming the markets. Even if we open setups on there, our risk should be not 2%, but 1% of our entire account. Goal should be protecting the capital. Simple as that. Right, so that being said, if you guys have any other questions, let me know. James, you want to learn futures, just go to YouTube and look for the basics. And once you learn the basics, reach out to me if you have any questions. That's the only way we can start this with, because you can find these basic videos, like there are millions of videos out there, which is going to teach you how these contracts move, what is what, and everything. So first things first, learn what is what, and then get back. We'll talk about more of the same in detail. So because I personally believe if you understand what I'm talking about by knowing the basics, it's going to help the learning curve even better. So take tonight and go to YouTube and look for how does futures contracts move. And same goes to Carleen as well. So Carleen, go to YouTube and look for anything which you can find on futures. Spend like 1 hour of your time. That's all it takes to learn the basics, by the way. I mean, believe me or not, that's all it takes. 1 hour of your time. Going to YouTube.
Sorry, do you set a 5-day moving average for futures?
No, I just use the SPY or QQQs.
Oh, okay.
So I look at SPY and QQQ's chart when it comes to the 5-day moving average, because the 5-day moving average on futures is completely different from the 130 SMA which we use, because there are a lot of other candles over there. Because the markets are open for 660 minutes, not 390 minutes. So yeah, James, spend 1 hour of your time, go to YouTube. There's a lot of videos which you'll find. Just don't take their strategies, just learn what is what. Just learn what is what, and then get back to me. Learn how these contracts move. What is micro contracts? What is mini contracts? Why are they structured that way? Just learn the basics. I don't want you to spend more time on like learning to how to trade all these. I will take care of that for you, but just focus on learning the basics on what is what. Get back to me. We'll discuss more.
Okay.
That's where you start. All right.
All right.
All right. So how do I have access to the recordings? And once the meeting is over, the recording will start processing. And once the processing is done, I'll upload it in my YouTube and I'll send you guys the link in the Patreon channel. So most likely by around 11:30, it should be ready to go. If the upload time takes a bit longer, it'll be there by midnight around 1 or 1:30. So you guys can check it out anytime you want. All right. So that being said, thank you so much for joining. I hope this was helpful. If you guys have
Hey,
any
Mario,
questions.
so-
Hey, go ahead, Leroy. What's up?
Hey, brother, are you planning on being live in the morning?
Yeah, we're going live tomorrow morning.
Okay, yes, sir. Well, I'll see you in the morning.
Yes, sir. Take care, man.
Y'all take care.
All right. So hope you guys have a wonderful rest of the day. And I will post the recordings shortly and keep an eye out in the Patreon's learning resources section. It'll be posted right there. Anyways, thank you for joining. Appreciate it. Have a great night. Take care.
All right, good night.
Good night.